and I want to give you my top 5 predictions around the market for 2024. And these include interest rates, real estate, a recession pending, the S&P 500 and where I think the price is going to go, and AI's next big moves for 2024. But before we do, make sure to hit that like and subscribe button. Your support and a simple click means a ton to me, and it's a way that I can keep this channel going, especially around predictions like this, and to see actually how my predictions go into the following year. So let's talk recession. So my prediction for a recession is whether we will go into a recession into 2024 or not. And currently being almost the last couple days of the year, I would say absolutely. I would say most of the data and analysts are predicting a higher than 50% probability going into a recession next year. And here are some of the factors that I think play into this. One is federal rate hikes. So we had all of these federal rate hikes that deeply created a restrictive financial environment, making lending tougher and money supply to constrict. And those implications are finally coming to a headway where we'll see the negative repercussions of probably slower growth or maybe even negative to zero growth going into 2024. Now, the Feds came out with their prediction for GDP going into 2024, and the numbers are predicting slower growth than 2023. So 2024 already, according to the Feds, is expected to have slower growth. And when we see that large of a decline in GDP growth, there's typically a recession. Also, something I like to look at is 2-year and 10-year Treasury yield curve. And right now, this is a red flag. The classic recession indicator is on this 2-year and 10-year yield curve, and the data points have dropped so significant that if you go back into any time in history, clear back in even to the 80s and before that, any time that these levels have dropped this low, we typically have an impending recession following. The next data point is inflation. So right now, we are not at the Fed's targeted rate of 2%. We are still at an inflation rate of 3.14% as of this month in December. And so we still have some work to do to get that federal or Fed target rate down to 2%. And so I don't see us dropping rates immediately based on that data, although some people are predicting a Q1 2024 rate drop. The other thing that really is alarming is kind of this revenge spending that's been happening, especially going into this last Christmas. Christmas numbers were not bad, and a lot of people were expecting them to be because of the amount of cash and credit card debt. But if you actually look at credit card debt, just the numbers implicitly on their own, credit card debt has hit an all-time high, and it has skyrocketed on a slope in the last 2 years that should be troubling for most individuals and this country, specifically lenders. And we've already seen APRs, like the percentage rate increase, over 30%. So if you're paying, a 10% rate, you saw a 30% increase on your credit card debt, which makes it even harder for you to pay off that debt in the future. Not to mention, we have crossed just this year the $1 trillion mark. We have over $1 trillion in credit card debt standing in America right now, and that is an all-time record high, which we have never seen before. All right, let's go into my second prediction, and that's around residential housing. Now, I believe in 2024, we will actually find the bottom in the residential real estate sector. Now, I don't think commercial real estate actually falls into this. That would be a completely different prediction. Now, 2024, I believe, will be the bottom, and here's some reasons why. 2023, we kind of hit this moment where things were going sideways. We did see some declines, especially in higher end homes nationally. Some areas really suffered, especially in certain cities where the sentiment or the politics may not have been good, and people fled the cities during COVID to kind of go to suburbia, and then suburbia was overwhelmed and people were starting to move back, and we see these massive declines. My home state and Idaho included, by the way, Utah and Idaho being some of the largest declines in price. But I think we're almost done around that, and let me give you some reasons why. Affordability is definitely at an all-time low, meaning the ability for someone to get in is not working towards the demand for a new home. However, because of the Fed's pause in rate hikes, or rate drops for that matter, because of the rate pause that happened this month, it is predicted that the Feds will drop rates 3 times into next year. And these aren't going to be big drops. They'll typically be quarter point drops. And some analysts are predicting that that first rate drop could happen in the first quarter of 2024. So what does that do to the housing market? Well, if rates start to drop, there will likely be an increase in demand for existing homes. And there's already a massive supply issue in the real estate market. And so if there's massive demand, low supply, what's going to happen to prices? Well, if lending gets easier, and I would predict along with this residential housing prediction, I would predict that mortgage rates are going to drop, lending practices will slightly get easier, and the ability for people to get cash and get into whether it's a first home or a second home or refinance, it's just going to be easier going into 2024. Now, these rate drops take time, but I believe this will help us find that bottom in the residential real estate market. And even personally, I'm in. Like, I'm going back into the market looking pretty bullish on where residential will be in the future. Now, there is a bill that is being proposed to help increase supply on homes on a federal level. And this bill is positioned to wipe out all hedge funds in the next 10 years that are buying real estate. In fact, it would force them to sell all of their real estate, which in some areas is up to 30% of the homes in certain areas, specifically like Nevada, Las Vegas. Now, if this were to happen, it would increase the supply, lower the demand, and houses could potentially drop. However, I do not think that bill is going to pass, and I think that the lobbyists and the money behind these hedge funds will kind of gear up and band arm, and that will not likely be a successful bill. All right, now let's talk about the S&P 500, or really the market in general. Where do I think the market is going to be? Do I feel like it's bearish, bullish, or sideways? And I will tell you just right off the cusp where I think it's going to go. I think we are positioned to have higher highs. So you could say that I'm a little bullish on the market. However, I think we're going to see an increase in volatility in 2024, which would mean the VIX is likely to increase in value because there'll be more volatility and a lot more uncertainty, because if the word recession is swimming in the crowds, people become a lot more hesitant in the markets and often pull money out and put them kind of under their mattresses, which we saw in the 2008 recession. Now, this is not necessarily a direct consequence or something that will be largely correlated to the price in the S&P 500. And I'm going to give you some weird outliers that I think could likely prop up the S&P 500 or at least keep it stable through the year 2024. Now, there's a lot of people that are predicting a market crash in 2024. Harry Dent being one of him in his rants that he commonly does. However, if you look at M2 supply, so money supply in this country, and where it went, where all this cash and stimulus went during and after the pandemic, most went out of, there was almost over $1 trillion that got pulled out of the market and went into bond-treasury connected type yield. So like, when's the last time you went to your bank, for example? And when's the last time you saw a short-term money market account that you could get over 5%, right? This is the first year ever we've seen returns for 6 months, 8 months, some up to a year, where you're getting over a fixed 5% return, and probably one of the safest investments that exists on the planet, right? Also, not to disclude CDs, certain annuities, we are seeing returns on short-term borrowing or lending at very high returns. And then the longer you go out, they start to drop because people are predicting lower rate in the future. Now, imagine that we have 3 rate drops really quickly in 2024. What's that going to do to people who have their money in these money market accounts? Well, say your 6-month ends in the spring, and now money markets accounts have dropped from 5% to, let's say, 3%. Your enticement to renew or to get another CD or another annuity or some type of long-term savings account is largely diminished. And so I believe people will actually be looking for alternative investment, which may put more pressure on the real estate market. This is an argument also for my real estate prediction. And it will often put pressure on the S&P 500. It's going to put pressure on the stock market because people are going to be looking for a more aggressive return. Now, does that mean that's going to happen there? I don't necessarily think so. The big 7 are really leading the pack, and people are saying AI is the reason that these stocks are being priced to perfection, meaning there's just no room for the price and errors to occur. So they're really being traded at their all-time high value in the future with no mistakes accounted for. And so I think increased volatility is going to happen. I think you're going to see higher highs for sure, but I also think you're going to see some mixed volatility after it hits its high, and like any news is going to be sensitive news into 2024. And let's hope that we don't have an act of terror or something that gets blown out of proportion, or some type of unintended consequence that's happening with our war currently in Israel and Hamas here in America, because that obviously would have unintended consequences. Now let's talk about rates. What are my predictions around rates? Well, you've heard a little bit about where I think rates will go. I definitely believe that we are done increasing rates for a little while, and I think that it's very likely, and there's an argument that we'll have 3 rate drops into 2024. Now, why would I say that? Well, bonds and treasury returns are already suffering because analysts are already predicting these rate drops. So it's kind of already being priced into the market. A lot of people know this, but a bond, when a rate drop happens, actually goes up in value, and there's a direct correlation between that. And we're already seeing the market reacting from a price point to that future idea. So the market is already predicting in that these rate drops are going to happen into 2024. And these are from brains much smarter than you and I, people that spend their time in these charts and in this data all day long to come up with these predictive analytics. Now, 3 drops in 2024, this is going to have the direct consequence of mortgage rates dropping. In fact, we're already seeing that. We're already seeing in some cases rates dropping on like your 15 and 30 year because of this pause that happened in December and the prediction of 3 rate drops going in next year. Now, let's wrap this up with my prediction on what is the next AI wave. Where are we going with AI? What are the opportunities that I should be looking for? And is it too late? Well, I would say we're just getting started when it comes to AI. However, I think there are going to be multiple phases and iterations of getting this right. One of the mistakes that I think we made in 2023 is overfunding certain AI companies that frankly have no use case. Meaning that some of the giants, some of the big 7s that are heavily investing in AI are actually creating products and tooling that these third-party companies and VC companies were funding, and startups that were coming out of nowhere were intended to solve. And now they have millions of dollars, and their use case is free on, for example, OpenAI, or these G models that just came out, or some of the future things that they're saying are going to come out with these newer AI wrap-up. So there's no question that the tide is slowly coming down in AI around, like, where are we going with these LLM models? Where has language taken us in terms of AI? But are we going to hit AGI in 2024? And I'm going to give you a pretty straight prediction on this. I'm going to say no. I do not think 2024 is our year for AGI. I don't think we have the capacity to get to that, and let me explain why. There are some fundamental flaws in AI, and it's not necessarily a flaw, but more something that's missing in order to get us to the stage of AGI. And there are companies like QStar, for example, who have a hyper focus on a different way of processing AI, where large language models are really based on input-output, where it literally responds and gives answers, and sometimes even hallucinates around output because of the input you fed it. There's no actual logic outside of the language logic, which is very similar to how we speak and how we run language, as even I'm speaking word after word after word. It's almost like a Q prompt, and this is how these LLMs are built to prompt which word comes next. Now, the transformers that built that are very unique. However, the next wave that I think is going to happen in 2024 is going to be numerical and not language-based. And so you could call it the war, or the ascension, or the combination of language and numbers. And I think numbers are going to be the focus. You're going to hear a lot of this numerical talk around AI going into 2024. And the companies that are positioned to win are going to be the ones that have the most numerical data in their industry. And what I mean by that is, most people don't know this, but large language models don't do math. They do, but not logically. They do it based on input-output. And that's why you can actually ask it a math problem and it will hallucinate the answer. It'll even give you the wrong answer, because if it was fed the wrong answer, it will hallucinate it. Where companies like QStar and some of these other emerging AI companies are focusing on real logic, real math logic. And according to QStar's latest report, we only have a grade school level math ability inside of these AIs. However, the results that it's rendering are astronomical. And so imagine we get that upgraded. Imagine we get that up to like second level calculus, that these AIs can actually operate and do that kind of math and processing, and then use it in the numerical world of data. What type of industries will be elevated? What type of tooling will be necessary? What companies will be valued just because of their data? Now, we're seeing a lot of lawsuits coming from, like we just saw the New York Times, for example, suing OpenAI for using their data to create information on their prompt. And I don't think that's going to end. I think we're going to see a lot of this copyright defining what stealing versus borrowing or creating original content actually is into 2024. And while that will probably suppress and shrink the language models for a time, the numerical ones will start to cultivate. And so I would be looking at companies to invest in that are very heavily data oriented and have lots of very unique data that no one else has, numerically based, because it will be leveraged into 2024. Now, having said that, don't make the same mistakes that people made in 2023, investing, buying into ideas that will likely be created for free by the large companies. If you're a startup and you're looking to do something unique in this space, look at ways to help cultivate your data or get your data exposed numerically that would be valuable to the public or to a certain asset class or industry that would result in shortcuts, would result in quicker answers. And I think that's where the LLM model got it wrong, where there was all these startups coming up with these ideas, but frankly, we're trying to innovate on something that didn't exist. And now we have this numerical-based coding that's going to be coming out largely adopted in AI. And if you're looking to build one of these, it's probably too late unless you've got a $50 million budget. How do we build it? How do we leverage the data that we have? Those are where the asset's going to be. And there might even be like mergers, acquisitions inside of like, we have the data and we want to sell it exclusively to this certain AI framework that makes it unique in its positionality. So there are my 5 predictions for 2024. Drop your comments in the comment section below or on the side. And I'd love to hear if you agree, disagree, or if you have some of your own predictions you'd like to share with the group. Otherwise, thanks for being on. You guys stay safe out there. And again, like and subscribe to stay updated on topics like these. It's really my job, and I feel like it's my responsibility to keep you guys safe in the market. Obviously, this is not financial advice, but I'm going to do everything that I can to keep you safe and to keep your investments growing. Thanks.